Listen-only mode.
Good morning, everyone. This is Mark Raymakers. I will be your host today for a webinar on how to sell single premium life. And it looks like we got a lot of folks that are jumping in on this webinar here this morning. So I'm going to hold off here for just another second, and then we'll go ahead and get started here. So appreciate you joining us here this morning. I'll give it just another second, and then we'll go ahead and we'll launch this particular webinar here this morning. Well, welcome back, everyone. This is Mark Raymakers with Insurance Agency Marketing Services. I'm going to be your host today for our webinar on how to sell single premium life. And this is a recorded webinar this morning, so you'll get a chance to replay this. What we'll do is we'll email this out to you here by the end of the day. And in addition to that, I'm going to give you our phone number real quick so you can jot that down. If you have to leave, you've got our phone number, and you can contact us if you have any questions, if we can help in any way. I will tell you that Insurance Agency Marketing Services has been in the business now going on 30 years. And we started offering single premium life when it wasn't necessarily the chic thing to do. So we've been doing this for a long time. We've gotten extremely good at this. And we can certainly help you in any single premium case that you may have. We've got probably 12, 13 carriers now that provide a single premium life product. So let's go ahead and I'm going to tell you real quick a little bit about us. I think it's important to know there's a lot of NMOs out there, IMOs, FMOs, that are vying for your business. And I think it just would be remiss if I didn't tell you a little bit about who we are and how we can help you. First off, we've been doing this now for over 29 years, going on 30 years, so we know what we're talking about. We started out offering annuity products and have grown tremendously, adding life into the mix about halfway through that period. And one of the nice things that we can do here for you is we are true case design managers. We can provide you the illustration support that you need. We're very solution oriented. Everyone's got a product, but can you really find someone who's going to think outside the box and help you place your cases? And that's one of the things that we do very well here. We're going to help you with the field underwriting part of it. So I know a lot of agents that are in this market today that have written annuities in the past or writing them now probably started out selling life insurance. And so things have changed tremendously. And what we've learned to do is find out what we need to know to get a good product and a good carrier to help get your case underwritten. So don't just walk away from a case because you might think that client's not going to qualify. That is not the case more times than not. The other thing is we scrub the applications. So once those come in the door, we make sure nothing's missing. So they go to the carrier. And obviously in the process of that, we want to make sure that everything goes in. We're not waiting for any outstanding forms. Sometimes the company surprises us with something, but for the most part, they are all going to go in there clean, and we get these approved very quickly. In fact, usually they're going to get approved faster than and issued faster than annuity. We're going to provide you proactive weekly status. There are times where with single premium life or even traditional life where you're going to not get an answer right away. Some of these are going to require an APS. Now, they don't require physical exam on the single premium life. But the point is that we're going to keep you in the know. Every week, we're going to let you know what's happening with your case through email, phone, or both. So you are free to do what you do best, which is sell, not follow up on the things that are non-profitable. That's what we do for you. We're experts in providing independent producers the tools that you need to succeed. So we look forward to earning your business. Now, for those of you that are brand new on this webinar here this morning, I see some new names I don't recognize. So thank you again for joining us. If you get contracted with us, and I certainly think that you would after you can see what we can do to help you, once you write $100,000 in single premium life, or $300,000, or $500,000, of course, this would apply to annuity, same dollar for dollar. Traditional life is discounted. But if we're talking single premium life this morning, you write $100,000. Let's say it's two cases. You get $100,000 total. You will, in addition to your commissions, get a $750 cash bonus or a 2-year subscription to the website newsletter service. And if you do not have that set up now, we can help you with that. If you wanted to purchase the program, Matt Neal, who sets up our webinars, can help you with that. or you can choose a brand new iPad. Those are always nice, especially when you're out there and you're filling out applications. You can't make a mistake with those. Folks, there's a lot of new people jumping on here. We're just talking a little bit about IMS, how we can help. So we're going to get into the heart of the webinar here in just a moment. Again, your host here is Mark Raymakers. Okay, so the second level, if you get 300,000 single premium life, now once you claim one, you can't continue to grow up in these producer bonuses. But if you hold off to the 300,000 level, you can choose the full Social Security program and 3,000 piece postcard mailing. That's been a very, very popular option. This is going to get you in front of more potential senior prospects / clients eventually. Or you can choose a 2,000 matching marketing money to promote your business, or a free gift card. Finally, if you want to wait till you get to the final level and you're interested in seminar selling, we've got two great seminar agents here. These are top producers of ours, and the first one is Matt Gill. He'll provide you the 5,000 piece mailing and seminar coaching, or there's the 4,000 piece seminar coaching with Dave Pimper. So either one of those can help you grow your business through the seminar selling. And these guys do a tremendous amount of business with us. Finally, there's a Ritz-Carlton Travel Rewards. You can make your own personal getaway. All right, real quick here, and then we're going to get going on this thing here. Referred producer program. If you refer an agent to us, this is a neat deal. If you send us one of your friends, what we'll do is once we get them contracted, we'll send you a check for $50 just for the contract. And then every time they write a piece of business, so let's say that you have 3 producers that might do $1 million in single premium life. That's $6,000 in cash for you, or annuities, traditional life as well. But for today's purpose, we're going to talk single premium life. That's going to get you another $6,000. You're not in the commission business. Your friend's not taking a commission hit. They're going to get the same street level commission that's been designated by the companies. So it's nice. It's just a way to earn some additional cash, and it's our way of saying thank you for the referral. Here's another thing that I really like. The marketing reimbursement program is a neat way for you to not only have a partner to help support the marketing side of your business. This is in addition to your commissions. So let's say you write a $100,000 single premium life case. We're going to put $200 in a marketing reimbursement account for you. So let's say at the end of the year, you want to do a Christmas party, or maybe you're doing seminars, or maybe you're purchasing leads. If you send us a receipt, for example, of $1,000, if you have $500 in your reimbursement account, we're going to turn around and send you a check for $500. So we're going to cover half of your expenses. Just send us the receipt, and that's in addition to your commission. So it's a great way to have a partner in the business. Okay, some of you may have seen or heard about this, but Matt Neal is the contact on this. We have the newsletter and social marketing, and I tell you what, he has done a tremendous job of growing our business through the internet. So not only that, but helping agents. So there's a number of different things that Matt Neal and his team can help you with: the website, lead forms, client management tools, email newsletters, and even the website. So if you want to know more about how you can grow your business in that respect, just call and ask for Matt Neal in our office, and he can help you with that. Our website, if you want to check us out, it's www.imsinc.com. Everything that you're going to want to see and need about or know about IMS is going to be out there. There's all different kinds of sales tools. The quoters are out there for term and annuities, life and annuity news, all the forms you would want, whether you're looking at life or annuity. It is all out there for you. So it's www.imsinc.com. Okay, let's go ahead and get into this thing here. For those of you that just joined us, there's a good bit of you here. This is a recorded webinar. So at the end of the webinar, what we'll do is we'll go ahead and we will shoot this recording out to you. We will follow up with a phone call. Obviously, everything that we're giving you here this morning is it's free to use as you choose, but we certainly would appreciate the opportunity to earn your business and to tell you how we can help you with your business and what we can do to support you and all the different things that we do here. So, okay, here we go. Why is this product so popular? Well, first of all, if you look at $1.4 trillion to be passed to the next generation a year, that's a lot of money. And we're really finding that out. As we have done more and more business in the annuity side, we continue to see annuities that are sitting out there, and clients are dying on those annuities. They're not passing them on to the next generation. And so by using single premium life, your clients can reposition an asset that they still have control over, and probably have more control over putting it into single premium life than they did in the annuity. So that's one of the reasons that's so popular. The next thing, obviously, is we want to make sure, and clients want to make sure, that that asset that they have is going to be passed income tax free to the next generation. Some of those qualified assets, as you know, are really a tax time bomb for the beneficiaries, especially when those beneficiaries, their children, are in their peak earning years. So we want to make sure that we're passing on as much wealth as we can on a tax-free basis. And your clients have probably paid enough in taxes. If given the choice, they'd probably rather give more to their kids than less due to the tax bite. Here's another thing that's really big, and some of you on here this morning might be writing long-term care. So you understand this, that the high cost of long-term care and the use it or lose it feeling with a standalone plan is not very appealing for a lot of senior clients. They may be set up financially really well, but they don't want to spend $400 or $500 for maybe a good Cadillac long-term care plan. So they opt not to do it. They don't want to lose their money if they don't use that plan. These single premium life products do have long-term care in them, and really it's an acceleration of the death benefit, which is tax-free. They're not paying any additional premium for it. It's built into the contract. It's hassle-free. It's very simple. There's no compliance with these particular plans unless, of course, you're looking at using a qualified rollover, which we can do that. We can take a qualified asset, roll it into one of these plans, and all we're looking at then is obviously you have to have product testing, and sometimes, very rarely, there will be some suitability. But the real nice thing about single premium life, your clients are never required to take a physical exam. It's a simplified issue, paper application, and a phone interview. We do have carriers that will actually approve it on the spot. That's really handy for your clients that might inherit money and they want to put it somewhere. And if they do get declined, then that's where you might want to consider sticking it into an annuity. Again, as I mentioned, faster than annuity turnaround time. We're getting these plans in, getting them approved, getting a contract out the door in a week's time. So it's very speedy turnaround time. Top commissions, paying up to 15% commission. So for those of you that have written annuities on clients and they're just sitting there, this is a way for you to go back to those existing clients, show them a way to reposition their assets in a more tax favorable way, providing them accelerated benefits, and making probably twice as much commission on this than you would on the annuity. And you are helping them tremendously. Here's the other thing. If you look at the interest rate that your clients are earning today that are guaranteed on some of their safe money, single premium life is paying a higher guaranteed rate than they're getting in their CDs, their checking, their savings, or money markets, some of their annuities. We can guarantee up to 3% on our single premium life plans. And here's the other thing too. Sounds breaking up. I'm sorry. Not really quite sure what's happening there. I'll try to sit still. Tax deferral. Here's the other thing. You've got those clients that are sitting out there, and I'd like to look at and pick on CDs a little bit, because as that money is sitting in a CD, your clients are going to get a 1099 based on the growth within their contracts in the bank. So with that said, they can take that taxable asset, put it into the single premium life, and never pay taxes again, which is a nice thing, especially when you look at the fact that they're getting less than 2%, whatever their tax bracket is. Let's say they're at a 15, 18, 20% tax bracket, and in addition to inflation, they really have themselves a lump sum of lazy money. And so repositioning into single premium life really makes sense. Okay, so the market, who's a prospect? I personally think that if you're in this business at all, there is an opportunity. We just have to think how we would apply that to the market that we're in or the prospect that we're seeing at that time. So you'll notice that I have this broken down into annuities, clients that are sitting with excess money or savings, checking, CDs, Medicare supplements. So if you're out there selling those, selling life insurance, selling long-term care, here is my story or my play on this and what I would be looking for if I were an agent in the field today. Now, I sell life insurance myself, but really not running into single premium opportunities because most of the clientele I deal with are fairly young. So if you're selling annuities or sold annuities in the past, what you want to be looking for is clients with annuities that they've put aside that they're not living on. And if you have a CRM, if you have a client resource management tool where you can go back and sort out your clients, I always think once your clients are 65 years old, if they've reached the retirement age, this is the point where things are going to change, as you know. We're going to reposition assets not so much in the growth phase, but the safety and the income generation phase. And once they've been retired for a while, they're going to know, am I kind of cutting it close at the end each month, or do I have more money than I need? And as they get older, they're going to slow down a little bit. So you want to look at those clients that you know that are sitting on annuities, and maybe it's not necessarily an annuity that you sold. I know that doing reviews is the greatest way to uncover extra assets because they may come to you with one annuity, but they've got a half a dozen other ones out there that they've written with half a dozen other agents that have never come back. So this is an opportunity for you to go back and uncover some assets. So we want to look at that. Obviously, distributions or taxes, ordinary income. A couple things to think about here. If they're going to liquidate that existing annuity. If they've got growth on it, they're going to have to pay taxes on it, right? So keep that in mind. But once we put it into the single premium life, if we've got a bonus product, we're going to make up for those taxes more times than not. Same with qualified funds. And even for the beneficiary inheriting those dollars, they're going to pay taxes, obviously, on what they're picking up there. Increasing face amount living benefits offset surrender charges. So as I mentioned, we've got products that have a 12% bonus. We've got a product that has a 10% bonus. So if you stop and think about it, although they may be giving up a little bit in the front end, we can help make it up on the back end with the bonus product. And obviously the other thing to think about too is if we're looking at, let's just look at some simple math. If you have a client with $100,000 and they put it in a single premium life, it could be worth $200,000 to them now, which means if they go into facility, if someone has to come and take care of them, they're using $200,000 to cover that expense, not the $100,000 that they would have had if they left it in the annuity. Here's the other thing, and this is interesting. This morning we got an application for $500,000. This lady had $1 million in her checking account, and it was just sitting there. She said, I'm comfortable with it here because it's FDIC insured. Well, the agent obviously explained to them how that works. She said, goodness, I need to reposition some of these assets. We put this into the Wealth Max bonus product. Client got a 12% bonus, and boy, are they happy. So don't forget to ask your clients when you're in front of them, what is the balance that they're holding in their checking, their savings? Do they have CDs? Because obviously if they do, as I mentioned, there's that minimal interest, there's the taxable growth. And one thing that I learned, I was an investment banker for a while, and I had a lot of clients would come in and we talk about their bank accounts and how we can reposition and better position themselves for the future. And a lot of times they told me, well, the CD is kind of the rainy day money. Well, what do you mean? Well, if I get sick, if I need to go to the hospital, or if I need to go go into a facility, people will point blank tell you this. Well, you know what? Let me show you another rainy day fund that we could put this money into. And that's where the single premium life really comes into play. If you're selling Medicare supplements, obviously now you've got those clients that are retiring and they're making sure that they've got everything budgeted correctly. Well, one thing that I've seen is that there's clients out there that are paying premiums on old life insurance policies. So what's happening is they may have taken these wedding policies out 30 or 40 years ago. They may be paying just a pittance in premiums, but the net amount at risk to them is greater than it is to the insurance company. A perfect example, I see this all the time. That $10,000 policy they picked up 40 years ago has $8,500 in cash in it. So who's really at risk now? It's not the insurance company, because all that money, that growth that they've got in there is their own money. Why don't we reposition that? Let's discontinue paying premiums, put that into a single premium life policy, and get them a $16,000 death benefit versus the $10,000 that they have now. So we do a lot of that repositioning of those old insurance policies. We consolidate that, we save the premiums, so now they can afford to pay for their prescriptions and whatever it is that they're doing. Life insurance clients, imploding universal life policies. I used to sell universal life policies to the tune of 200 applications a year. When I first started, they were crediting 9.5% interest. They're not paying that today. So what does that tell you? Those policies that were written 15, 20 years ago are more than likely underfunded. And a lot of agents that have written those are not going back to see their clients. Statistically, only 51% of the agents in the field ever go back and see their clients. So with that said, if you're out and about and you're meeting a brand new prospect, ask them, do you have any existing life insurance? And do you know by any chance if you have a universal life contract? They're probably going to tell you, I don't know. Go have them grab those policies and let's take a look at it, because chances are those policies are in trouble. So we're going to save those from imploding due to the fact that they're underfunded because the interest rates have been cut in half since those contracts were taken out. More than likely, can't guarantee they're all cut in half, but based on my experience when I first started, the interest rates have been cut in half. Here's the other thing. There's no guaranteed death benefit on those old contracts. Whatever happens, happens. If the interest rate comes down, they're not paying more premiums, they're going to lapse. Here's the other thing too. Again, as they retire, given the chance, if they can consolidate and discontinue paying premiums on all life insurance policies, then they're going to do it. And that's where what we would do is we'd try to 1035 those into a legacy plan of some kind. and get those policies paid up for them and get them benefits that they didn't have before. If you're selling long-term care, again, as I mentioned, clients that have been declined for long-term care benefits, these are great products for this. And let me tell you why. They may have a lump sum of money sitting somewhere, and maybe they do not qualify for long-term care because of a morbidity reason. Maybe it's arthritis. Maybe they've had back issues, maybe they, whatever it would be. So the long-term care carriers is we're not going to take them. Single premium life, most of the companies we have underwrite for mortality only. If they can qualify for life insurance, they qualify for the long-term care benefits. Now we do have a couple products out there, and I'm gonna tip you off on one here. The MoneyGuard product, the Genworth product. They underwrite morbidity and mortality separately. So if the client might qualify for mortality, but don't qualify based on morbidity, so then they'd be declined. So what we've been able to do, and we offer both of those products, by the way, what we've been able to do is we've been able to take those clients and introduce those to another one of our single premium carriers and get them coverage. So if you've written those plans before, if you've had a declination, give us a call. We've placed more of those policies than you can imagine because they do qualify for the mortality, but they didn't qualify for the morbidity. Again, that use it or lose it philosophy, they don't lose it. If they put the money in a single premium life, if they ever want access to it, as I mentioned, again, you could take it out for the long-term care, home health care, and if they don't use it, it goes tax-free to the beneficiaries. And again, they can't afford standalone policies. They might have an annuity that they're not drawing an income from that they could just move over. Okay, so penalties and taxation. Let's look at this real quick. Just some things to think about. Clients should consult their tax advisors about the tax implications of their purchase. That's your little compliance point that we've got to say. When discussing policy loans and withdrawals, here's some things to think about. Early cash values will be less than the premium paid. So obviously, what's happening is you're buying life insurance, okay? So on some of these products, you'll see that what's in there now is going to be less than they put in unless you are using one of our plans that has a full return of premium. So your clients can put money into these contracts and 3 years later, they can get all their money back plus growth. So that's really nice, especially if you've sold annuities to clients that understand the bonuses. They like the bonus. They like the ability to have access to their funds. More times than not, these policies will be a modified endowment contract. So if they were to take a loan out of the contract, which they can do, they will be paying taxes over and above their cost basis, okay? So keep that in mind. Accelerated benefits and loans do reduce the death benefit. So if you look at a lot of these plans, what they do is they take that death benefit and they will divide it out over 36 months. Some will take a 2% of the death benefit, but since it's death benefit that's coming to them, it's not taxable. But if they do take that out, they do take the loans out when they pass away, they subtract what's been paid out from the death benefit. Okay, it looks like I have a question here, I believe. Okay, yep, just a comment. Yep, this is recorded. I see that some of you obviously are coming in a little late here, so yeah, we'll get the recording out to you. When annuities are used to pay premiums, the agent must inform the clients that, and I'm going to tell you this real quick, taxes will be incurred on any gain at ordinary income tax rates because obviously when it's a qualified plan, we want to be looking at that. And we do have those plans that will take a qualified asset and move it over into a SPIA/life product. They're a combo plan. There is a 10% penalty tax if the client is to do that part age 59 and a half. We do have some carriers that will do that. It's just not a real favorable thing. We like to wait until they're at least 60 years old, which is usually the minimum issue age on these contracts. So same taxation as you might imagine. You cannot 1035 an annuity to a life policy, but you can 1035 life to an annuity, right? So if your client has a non-qualified annuity and they want to put it into single premium life, they will have to surrender the annuity to put it into the life plan. If they have a qualified annuity, we will 1035 that into one of our products that has a single premium immediate annuity, which will then fund the life contract. The client just receives a 1099 for the taxable SPIA payout each year. You can't buy those as standalone plans with some of these products, but they are out there. So all right, so obviously what you can see is that if you're in the industry, obviously you all are because you're on this webinar today, there's a lot of different opportunities out there. You just have to keep your eyes open. And I think the thing is right now is most of your clients out there Most of your prospects out there are not aware of these plans. They may have heard of single premium life. In fact, the very first policy I sold was single premium life. That was back in 1989, and a completely different product than what we have available today. So your clients might be aware of a single premium life, but they have no clue about all these extra benefits that are built into it, bonuses and free withdrawals and return of premium and long-term care and all that. So this is a great opportunity for you to maybe go back and stop and think. Here's one thing that you want to consider. If you've written an annuity, and I've seen this because remember, we started writing annuities over 29 years ago. When we see annuities come in, I look at the suitability forms on occasion. I'll see where an agent wrote an annuity, and it says right there, what is your intention? What do you plan to do with this annuity? And it'll say to pass on to beneficiaries. We all know that the most efficient way to pass an asset to the next generation or to a beneficiary is through insurance, life insurance. So what I've seen agents do is they go back to those clients that they wrote those on and show them this particular plan. And if it's been, I think, 5 years now, 4 or 5 years since the suitability form came out with annuities, you are at a point right now where you probably have a 5 or 6% surrender charge. With our bonus product, not only are we going to cover that surrender charge by putting it into this plan, one of these plans, but now your client's still going to be further ahead because we have 5 or 6% extra bonus on their money going in. So it offsets that. So keep that in mind. Okay. Marketing materials. These are just a few of the different things that we have available. And what some of the agents have been doing out there is they're doing, if they're sending out an annual statement, certainly don't want to send out with a Christmas card, but if you're sending out something to your clients on a quarterly or an annual basis, it would be worth it to slide one of these pieces in here that we've put together and that we can customize for you. There's newspaper ads you can see, those black and whites right there. Those are examples of some of the things that we've created that agents have used. But the nice thing is just slide these in there, follow up with a phone call, especially for those clients that you think would be the best prospects to talk to about single premium life. You know, we do have some other pieces that are not on here, but I think the point is that if you're interested in growing your business, and I can tell you right now that the agents that are incorporating this into their business are seeing $20, $30, $50, $100,000 extra income that they're putting in their pocket that they didn't have before. I had an agent wrote a $1.3 million as an annuity producer, went back to his clients, wrote over $1.3 million in single premium life. He collected $150,000 plus dollars selling single premium life. So if you want to make more money, this is a great way to do it. But it's not just about the money. You are truly helping your clients. They don't know about this product until you present it to them. And so we've got the marketing pieces to help you with that. Okay, let's see. I have a question here. I'm going to read through this real quick. If you want to just take a look at some sales ideas, and I'll hit on all these here in just a minute. Okay. Oh, you know, this question here, let's see. Garner, if you roll out of a product you wrote with a company into another company you're writing for, we not be able to, you know, I have seen, if you make it a practice, let's say that you're writing annuities with ABC company and you go back and you start hammering ABC clients and you're rolling a tremendous amount of business out of there to go somewhere else, the company's probably going to start getting a little bit leery and a little bit concerned about what you're doing. But here's the thing. These products are not right for everybody. They are right for a lot of your clients. And, you know, if they've been sitting on these annuities for 10 years or more, or maybe 5, you know, whatever the situation is, if you're doing it and, you know, you're rolling this out after a year or two of them being in there, the company's probably going to be a little bit concerned. But I can tell you right now, you're not going to go out and you're not going to roll 100% of your clients over into single premium life. It just isn't going to happen, because I know that you've got clients out there that really need every single dollar that they've saved over their retirement. And so those are not necessarily going to be good prospects for that. But obviously some of those clients that are a little bit more suited for this, you want to go talk to them. And you know, there's some of the carriers that we have, they will not do if you wrote an annuity with this carrier and they have a single premium life, they're not going to allow you to do it. But you know, we have seen those rolled over into different carriers. So, you know, it just really depends on the situation. Okay. Good question. Do you have a slide showing the competitive landscape for single premium life? Yes, I do actually. And I got a neat little piece too that I can make available to you. All right, let's see. Another question. Lots of good questions are popping up here. Okay. Client is 67 years old, is healthy, has a variable annuity with current surrender value of $225,000, but does not like variability in market, needs to maintain at least $500,000 in death benefit. Needs keeps fund in deferred status for at least next 5 years. Can single premium life help? Yes, it can. And here's the thing too. We've got some products that are fully underwritten that we use for single premium life as well. Most of these I mentioned here this morning are going to be the true simplified issue, no physical exam, just paper app phone interview. So there are times where it just makes sense for us to do a fully underwritten product. And yes, we can certainly do something there for that. Okay, why don't I do this real quick here? Let's look at another question. If a prospect has a qualified annuity with ABC Company past the surrender period and wants to bring the annuity to me, is that a trustee to trustee transfer for 1035? Let's see. Here's how we would do that. That's a great question. And I kind of touched on this a little bit before. As long as we're doing a like transfer, and we've had these before. So if we've got a situation to where the trustee is the signer or the applicant on it, we have to have the exact same signer, the same owner on the 1035. And what we're going to do in this case is we're going to 1035 this into the single premium immediate annuity, which will then be used to fund the insurance. So as long as we're doing a like kind, because remember, if we're going to an annuity, we can go into a single premium immediate annuity. Now, I'll tell you, these single premium immediate annuities and these life combo products, they are just that. They're combo. You can't buy them separately. You buy it as a package deal. So what happens is once we roll that money from that qualified annuity now into the single premium immediate annuity, it's still considered like kind of, we have everything is the same, insured, applicant, all that. Okay. So what happens then is that as that policy is approved, there's an immediate payout from the SPIA, which then triggers a 1099 to the client. The client does not receive that SPIA payout. It goes directly into the insurance policy, which then the client never receives a check. They never have to pay a check. It's all done internally. And then after, depending on the length of time that we choose, the carriers can go anywhere from a 3, 5, 7, or 10 pay SPIA. Then once that SPIA is all paid out, the SPIA is done, taxes are paid, the life insurance is done, it's paid up, guaranteed for life. Okay, so great question. Hopefully that all made sense to you. Okay, let me see. We're going to move on to another question here, and then we'll hit some more of these slides. Okay. Why do a rollover and not have them purchase a single life and have an annuity? Well, Michael, the reason that we would do that is here's a couple of different things to think about. If you have a client that's got a qualified asset, and you may have come in a little bit late because we did brush on this a little bit, but if you have a client with a qualified asset, and let's just say we're looking at $100,000, okay? So now that $100,000, which is a qualified asset, which is fully taxable, right? That if that client dies on the $100,000, it now goes $100,000 over to the beneficiary, right? So now that beneficiary can add $100,000 to their gross income for the year, which potentially could put them in a higher tax bracket. So now the beneficiary is going to really get hit with a tax time bomb. Or if the client takes that money right now and puts it into one of these SPIA Life combo plans, the client can diffuse the taxes that would be passed on to the next generation. They pay them now, and then they're going to pass on a tax-free death benefit, which would exceed what that qualified annuity would have paid the beneficiary. We had an example yesterday I worked on with an agent where if we left the money sitting where it was and we pass it to the client's child, they would have received less than $75,000 on that. Actually, it was a $200,000 case. So at probably a 30% tax bracket was the beneficiary because they were an engineer making a lot of money, versus putting it into the life plan, the SPIA Life combo. The beneficiary would have inherited over $100,000 more money by putting it into this plan versus leaving it sit. That's why we want to do that, because we want to make sure that that frugal client is able to move that money over to the beneficiary as effectively as possible. Okay. Some clients could care less. They say, you know what, hey, this is newfound money. I don't owe this to them. Well, true. But what would you rather do? Would you rather give that money to Uncle Sam, or would you rather give it to your kids? Okay. All right. Any underperforming UL may not have enough surrender value to provide same level of coverage. Can SPL be blended with term? Great question. We cannot blend it with term. But here's the thing that I've seen. More times than not, what happens, Frank, is in the situations where we've done this, not all of them, but a good majority of them, what happens is the client says, you know what, I really don't need that $100,000 death benefit anymore. My kids are grown. We've done a great job of saving. We got plenty of money for retirement, but I would be willing to take a $50,000 paid up policy. And so that's what we do. We just figure whatever the cash surrender value is, and we get them a paid up policy. So you make a very good point, but if you've got a client that is concerned about that, keeping that $100,000, here's another thing we've done. We've got a plan where it has a guarantee no lapse. So we do a 1035 into that. We cut the premiums down substantially from what they're paying today, and we still guarantee them that death benefit that they need. So there are alternatives. And that's why I say we're not just product pushers. We are solution oriented. We find a resolution to your clients' concerns and their objectives. So that's why I say I think once given the opportunity, you'll see it just makes sense to do business with us here at IAMS. Can you use a reverse mortgage to fund an SPL? You know something, Alan? We have had more companies tell us no, they just don't like them. So not to say that we haven't had them come in. Let's put it this way. We've had some agents that would just say, here's what they're doing, and they get the check and they don't tell us what it's from. Not that we condone that activity, but the companies, once they know that it's going to be a reverse mortgage, they don't get real excited about it. Okay, SPIA is not taxed, right? But the transfer to the SPL is taxable. Okay, here's how it works. When that SPIA, when we take that money and we roll it into the SPIA, that in itself is not going to trigger a taxable event. It's when the SPIA starts generating the payout. So perfect example here, again, $100,000 qualified annuity rolls over into the single premium immediate annuity. That does not generate a tax. It's when that SPIA starts the payout. So what your client will see as soon as that rollover is completed, Joe, they will receive a 1099 that year, because we're going to generate a payout immediately to fund the life insurance. And then every year for the next 3, 5, 7, or 10 years, there'll be a SPIA payout generated, goes into the life insurance, boom, the client gets a 1099. So that's why we use the SPIA life combo. That way we can diffuse the taxation. It's kind of like eating the elephant one bite at a time as opposed to trying to swallow it whole. Okay, what else we have here? Oh, great questions. Okay, just answer the question. Male age 55. I'm not sure what the question is. I just have a male age 55. So if you're asking for a rate on a male age 55, we're going to more than double their death benefit on whatever their premium is. Yes, Stephen, you may have the recording when this is over. I'm going to email this over to everybody. What is the maximum issue age for these products? I'm glad somebody asked that. Susan, 85 is going to be the typical maximum issue age on these particular contracts. We do have some situations, quite honestly, where we've gone up to age 90. We've got a product that we can use that'll issue up to age 90. So 100,000 single premium life will give you $200,000 for long-term care. So you use $50,000 for long-term care. Then what is the death benefit at that time? $150,000. No, I'm sorry. Yeah, $150,000. Because what happens is when the companies trigger or generate that long-term care payout, most of them are going to do a monthly payout. We have some that will do a lump sum. They might pay out 85% or 80% or 90% of the death benefit. But what happens is when they're starting to take that long-term care payout on a monthly basis, if they've taken $50,000 out, it just reduces the death benefit dollar for dollar down to $150,000. Now, I will say that we've got carriers that'll do 2%. We've got carriers that'll take a $250 fee off the top, and then they divide it out over 36 months. So that's how that works. Okay. Boy, lots of questions here. Okay, good stuff. I appreciate this. Okay. All right, next question I see. What company underwrites this product? You know something, Gary? We have got probably, I need to go back because we've added some new carriers. I would say we probably have 12 to 13 different companies right now that we can offer single premium life for. I don't know, it's probably more than that now I think about it, because we do have some fully underwritten plans, which we could probably say we've got 14 maybe carriers. Ratings are going to vary. So they're going to vary anywhere from a B++ all the way up to an A+. Participating or non-par. We do have a participating plan. Most of them are not a participating. Most of them are non-par. Some of those are index life. Some of them are like a UL. But yeah, we do have whole life plans as well. So okay, I'm just reading a question. They're fairly lengthy one. I tell you what, we can certainly talk after, Frank, after the webinar. I can figure out. We'll talk a little bit more. Yeah, we can talk a little bit more about this particular case that you're working on offline after the webinar. So hopefully you'll allow me a few minutes of your time. We can gather what we need and see what we can put together for you. What happens if you have a $200,000 in a single premium life policy and you use it all? Is there anything left residually, or is it gone and none left as death benefit? Man, these are great questions. You know, we do have some companies, Michael, that will they will have a residual death benefit, say down to $10,000 or $15,000. Other ones, they'll pay it all out, every single dollar of it. So, okay, John is asking if we can hold questions till the end. Okay, I'm okay with that. If everybody else is, we'll go through these sales ideas real quick because I understand some of you need to get to appointments. But yeah, we'll pick up on the questions here in a minute, and I hope you're all okay with that. I understand some of you time is of the essence here. So here's some things to think about. You know, I'm the guy that learned years ago that you need to do reviews with your clients, and due to some personal tragedies in my life, I ended up having to get out of the field, and now I'm doing something to help advisors such as yourself to hopefully grow your business and to be more successful in what you're doing. I mentored under a MDRT top of the table, quarter of the table producer, and one of the things he told me is to always tell your clients that you're going to do a review and mean it. Go back and see them. And so that's what I did. And you know, I found that over time that I did sell quite a bit of business to my existing clientele. And it's not just that, but then it's the referrals. So they're going to help you with your business. So here's what I would personally do. If you have a way to go back and look at your clients that, you know, if you can sort them out, or maybe you can just remember, but I'd go back to those clients that have qualified accounts. And I would look at those, and this is the thought. If you can catch them before they turn 70 and a half, and we all know why that is, and I'm going to kind of blend some bullet points together here. But if you can catch them before they have to start taking their RMDs, if you show them this product, that's obviously a step in the right direction. But you're going to find out too by going out and talking to them if they need the RMD. I'm amazed at how many senior clients out there do not need their RMDs. They just, because they have seen the best and the worst of the economy in their lifetime. There's been some good things and there's been some bad things, no doubt. But a lot of these too have seen what happened in the Depression years. They've seen stock market crashes and they've saved their dollars. And now here they are retired. They're forced to take out an RMD. And so they're just sticking them in the bank more times than not. So we can use those plans I talked about where we use the SPIA and the life combo. Or what they've done is they've taken their RMDs and they just stick them in the bank and they've accumulated $40,000 or $50,000. Let's put that money into single premium life. Let's give them more control, more access, more growth on their accounts by utilizing these plans. Here's another thing to think about too. Or you might even just use one RMD depending on the size of the account. We've done that before too. We've seen some huge RMDs. But the other thing too is look at the 10% free withdrawal. I had a conversation with an agent yesterday, and he's going to go out and write a case next week where what's happening is the client's taxation just keeps growing and growing and growing because the account's doing very well. But we talked about taking up a one-time 10% free withdrawal. Let's cut the legs out from underneath this thing that's becoming a taxable situation for the beneficiary by taking out a one-time 10% free withdrawal. We're going to take a $50,000 free withdrawal and put it into a single premium life plan to give them a $100,000 death benefit, $100,000 of the long-term care that they never had before. So don't forget about your clients' 10% free withdrawals. Put those into the plan and get them a little bit extra. Here's the other way of looking at it. If they do that and the children inherit that that taxable issue one day, because they will, someone's going to get it, right? So what they're going to do is they're going to create a little separate fund, the life insurance policy, to help offset the taxation on the money that the kids potentially could inherit if your clients don't spend all the money. Okay. Underperforming policies, we spend a good amount of time on that. Or even those policies that have a ton of cash value have a little net amount of risk to the insurance company. Why do we buy life insurance? If you look at it, this is Life Insurance 101. You buy life insurance to transfer the risk to the insurance company. And if your clients have an inordinate amount of cash in their insurance policy, they're breaking the rule of why we buy life insurance. We want to buy it because we don't want to carry the risk. We want the insurance companies to have that burden of providing the maximum amount of return on our money on a tax-free basis to cover expenses or whatever it would be you would use the life insurance for. So keep that in mind. Underperforming CDs, excess checking or savings accounts. It's out there. It's huge. But a lot of clients, the senior clients, just feel that FDIC insurance is so important to them. Well, let's really look and see what they're insured up to. If it's that important, okay, let's move the rest of the money out of there that's not FDIC insured, okay? So it's a thought. And obviously you can show them the benefits as a single premium life. Doing the policy reviews are huge. One of the things that I've seen in this business since I started back in '88 was that as you go back and you see your clients, and if you're seeing your clients, if you're doing reviews, you can say, yep, amen, Mark, I agree with you. If you're not doing reviews, you're missing the boat. Because chances are, if you went out and you wrote one annuity, you've got a client, you wrote one annuity on, that's all you have. I'll guarantee you right now, they have more annuities. They probably have CDs. They probably have some stock, mutual funds, bond funds. They have life insurance. It's a fact. They do. And if you're not going back to see them, you're missing the opportunity to uncover the money that the other agents that have been out there before never went back to see. So believe me on this, the statistics are not lying. Agents are just not going back and seeing their clients. And this is an opportunity for you to be their guy or their gal, their advisor for life until they're gone. And then you help make sure that when they're gone, that their widow or widower or their children are getting those assets most efficiently as possible. So do the reviews. If you don't have anything that you're using for a review, we have a multitude of different things that you can use, and we'd be happy to get those over to you. If you go out to our website, I gave this to you before, but it's www.imzinc.com. You'll see some videos, you'll see marketing pieces on there, you'll see the single premium life toolkit. You just go out to that and you'll see all these different things that can help you. And then contact us. What we're going to do is we are going to obviously run your quotes. We're going to shop the best carriers that are out there that will be best suited for your particular prospect or client. We've got a lot of different carriers that I mentioned for single premium life, not just because we want to have a bunch of contracts, but they all have a special little niche, a special little need. Some of them we write a lot more premium than we do others because the others might have just this little unique special situation to where we'd want to go to them. So keep that in mind. We're going to scrub your applications. Once they come in, if there's something missing, we're going to make sure that it all goes in together. And the first case is always the hardest. You know that. Think about the first day you went out in the field and the first appointment you had, the first sale you had. Chances are you're probably sweating in places you didn't know you could sweat. At least that's my first recollection. But, it's a little bit stressful. So the first one's going to be a little bit difficult. It's going to be a little bit stressful for you. But once you get through it, you'll see it's easy. And here's the other thing too. As I mentioned, I'd been in the field. I still sell. I'm not going to embarrass you. If you want help and you are in front of a prospect and you have a question and you want me to be the fly on the wall, give us a call here, 800-255-5055. Put me on speakerphone. I will keep my mouth shut until you have a question or your prospect or your client has a question, and I'll help answer it. I will help you get out of that uncomfortable situation and write that application. I can't tell you how many times I've been on a phone conference call with an agent and a prospect and help close the deal. So if you need help, that's what we're here for. We're going to help you get your cases issued and paid as quickly as possible, because you know what? We don't get paid until you do. And we're going to provide you the weekly status update. We're going to allow you more time to prospect, more time to work on growing your business and getting in front of the clients. Okay, I'm going to leave this last point up here for you while I'm answering some questions, but we do provide you a tremendous trip every other year now. We're generally doing this on a year-and-a-half qualification, so an 18-month qualification. And this is based on everything that you write with us. But you'll see the top level here is $2 million. So if you did just annuities, it'd be $2 million. If you did just single premium life, it's 1.5. We had an agent actually qualified for single premium life, went back out to his annuity clients. I mentioned him already. Or target life, or anything that you do, all goes towards a trip for producer and guests. So if you've got a significant other you want to bring along, that would be wonderful. And this is to Victoria, British Columbia. If you've never been there, you need to go there. This is a absolutely beautiful city. Got a lot of fun events planned for you. We'd love to see you there. So that is trip dates August 3rd through the 7th next year. And the qualification period will go to June 30th. So let me tell you something. If you've got a lot of annuity clients, I'd be willing to bet you that we could probably get you there just on single premium life alone. Okay, so questions. Are you going to show a spreadsheet showing the growth of SPL save for an 80-year-old person? I'm not going to do that, but I can certainly do that for you. If you want Walter, if you want something I can email over to you, I can show you what we can do for your prospects. Okay. Michael, I appreciate that. Yes, I will give you a call. Look forward to that. And let's see. All right, we held the questions. I can delete that question here. All right, or comment. Okay. Gary says, yes, Victoria is beautiful. Been there, been to the Fairmont. Well, you know something, Gary? We'd love to have you come back. Come with us. Okay, do you have a standard fact finder form questions to use to lead clients to single premium life? I do actually have something. I do, absolutely. I've got a piece. It's kind of a neat little deal. It's what it does is it goes through. It's like 10 questions. It asks your client about some of the benefits of single premium life, and you don't even mention single premium life. So let me tell you, this is one thing too. And this is something I've learned. This is something that you've probably seen before too, if you've ever tried to offer life insurance to a senior. Final expense is a big market. And obviously the reason for that is because there's a lot of people out there that either failed to plan or they just didn't buy life insurance. They just didn't think it was necessary until the barn was on fire and the doors, the gates open and the horses ran out, right? So, but with single premium life, there's that. Well, there's the whole myriad of things that we talked about here before. But once you look at the benefits of the plan, that's what sells it. It's not the fact that it's a life insurance policy, although that is part of it. If you go in there and you tell your clients, I've got a single premium life policy I want to show you, they're going to say, I'm not interested. I don't need life insurance. Kids are growing, It's not about the life insurance. You can call it anything you want, but once your clients see all the benefits and features that it has, comparing it to what they're sitting with today, it just makes sense to reposition those assets into the single premium life contract. And then you can tell them, you know what this is? This is a single premium life plan. It's very simple. And then you know what? Then the deal's done. And then they go ahead and once they understand all the benefits, then they're excited and they buy it. Is a long-term care rider an accelerated benefit? Yes, it is. That's exactly what it is. Okay. All right. This is the comment. All right. Amen. When you call it SPL, it's the same as, yes, it is, Gary. Yeah, we, single premium life, single premium, because the reason is there's more than just one type of single premium plan. They're not all whole life. Some of them are UL. Some of them use index life. Our number one selling product is an index life type product, actually. Let's see here. Joe, absolutely. Be happy to give you a call when we're done here. All right. And let's see here. Yep. I'm going to call everybody, especially for, we really want to talk with everybody. And that's, obviously the goal, because this is what's interesting. I started with a company 6 years ago, been in the business since '88. But when you look at what's happened in this market, there are more and more and more companies that are coming up with single premium life. And why do you suppose that is? Because they see the trend. They see all the annuities, the trillions of dollars sitting in annuities, and they're seeing that money leave their company. Why? Because it's going to single premium life. We knew this was happening. That's why we've positioned ourselves with some great carriers. That's why we have invested so much of our efforts into this. And that's why we have single premium life webinars every single Friday. We're good at this. We know how to help you with it. And we're just asking that you give us the opportunity to show you how to do it. And, that's why that's why we hold these. That's why we want to call you, because we want to visit with you about what we can do and how we can help you. Is there a chart? No, there's no charge for the accelerated benefits. Those are built into the contract, actually. So it's pretty simple. It's just an acceleration of the death benefit. So you're buying life insurance is what you're doing, and we're using that to cover the long-term care and the home health care expenses. So you can tell I'm pretty passionate about this. I'm excited about this product because I've seen it help so many senior clients. And like I mentioned to you before, that was the first policy I sold. And yeah, I was sweating like crazy. I was fresh out of college. Moved from college on a Friday, and on Monday I was making appointments to sell insurance. And that next week I sat down and sold my first life insurance policy. It was a single premium plan. She was 74 years old, I think it was. Great payday for me. I'll become a fan of single premium life real quick. Now, of course, we offer every other product you can imagine. We do guarantee issue, simplified issue, term, whole life, index life, universal life, first to die, second to die. If there's a life insurance product out there, we have it. We'd love the opportunity to help you on that side of your business too. But since today is Single Premium Life Friday, this is what we're talking about. If you're in the senior market, there's a prospect out there for you. In fact, I think we statistically sat down and figured if you've got $1 million in annuities on the books, you have at least $100,000 that could go into single premium life. Now, if you stop and think about it, if you write $100,000 in single premium life a year, that's $9,000 in commission that you're adding to your bottom line that you didn't have before. And all it takes is a little bit of, as my mom used to say, a little bit of oomph to get up and just to look in those files, to go into your CRM program that you have all your clients listed in, or whatever you use to manage your client database. And even if you were to write, let's say you write $25,000 in single premium life a quarter. Again, that's $9,000 that you've added at the end of the year. So it's just, the time is right. It really, truly is. And, we want to help you get there. Okay, do you have single premium life with a short-term surrender charge? In other words, a client, other than the surrender charges are generally going to be around 10 years before. And now this is on a traditional plan that doesn't have return to premium. You're going to see that if a client puts it into one of these return to premium products, they can get all their money out anytime they want. Now, of course, you don't want them to do that in the first 2 years because of the chargebacks on your commission. But I'll tell you, based on experience, I can't even count on one hand probably the number of cases that we've had that have been surrendered under the return of premium benefit. So these plans are very persistent and consistent. Once you write them, they don't go south on you. Those clients are keeping this because they know that they have found themselves something that just makes great sense for their portfolio. And so if you're looking at a whole life plan, yeah, it's going to take a while before the cash value in the contract is going to be equivalent to the deposit, because generally speaking, those are endowment plans, and those are not going to, obviously the cash value won't be what the death benefit is until they endow, which, age 100 or whatever it would be. So, okay. Yeah. Okay. Yeah. Okay. Just some comments here. No questions. Okay. All right. Question box is empty. I'm going to give you one more time here our phone number because we want the opportunity. You know, we love this business. We love single premium life, obviously, and we want to help. You've probably heard me say that more than once. The number here is 800-255-5055 and ask for anyone in life marketing. This is a life product. It's not an annuity product. So you want to talk with life marketing if you want an illustration, if you want product details, if you want marketing information, whatever it would be, and we're here to help you with that. And again, we do have a number of carriers that you can't just necessarily contract and just say, I'm just going to do business with this company, because it may come out that that may not necessarily be the best company for the case that you're working on. But that's why we want to visit with you and find out what's going to make the most sense for you. Okay, Mary, let's see. Yep, I can certainly do that, Mary. I will email that information and I'll give you a call. Okay. Our email address, or web address, I should say, is www.imsinc.com. So www.imsinc.com. If you want to go out there and check us out, our website is going to be filled with information that you need. One thing too is, it's kind of nice to put a face with a voice in our business. Obviously, we don't always get to meet the people we talk to, but if you ever want to see who you're talking with, who your marketer is or is going to be, you can go out to the website. There's a page out there that's going to have a picture of our staff, as well as a little history, a little bit about them, their interest, and get to know them a little bit more on a personal basis. So that's certainly up to you if you would like to do that, but it is available to you. And with that said, my question box is empty. So I'm going to go ahead and, well, maybe it's not. Okay. Okay. Well, Gary, I'd like to know who that is that you're using for that. That might be a carrier that we'd want to pick up. So hopefully we can talk here today. We do have one that goes up to 90 as well, but more than likely it's not the same carrier. So look forward to the opportunity to talk about that. Okay, so keep an eye open on your email. I'm going to email these out to you. I will tell you, if you notice that it doesn't come through to you today, by the end of the day, please check your junk folder. Sometimes these will go there, not because we want it to, of course, but sometimes we do have a little issue getting through some of the different servers out there, and firewalls are a little high, a little thick. And it will be coming from mark@imsinc.com. If you don't see it, check your junk or look for that sender. So, okay. Great questions today. I certainly appreciate everyone's time this morning. I certainly appreciate the opportunity to visit with you here shortly, talk with you about what we can do to help. Either myself or one of the other marketers on my staff will be calling you here within the next few days. Of course, probably not necessarily over the weekend, but if you don't hear from us today, then you will hear from us early next week. Okay. David, I will be giving you a call. Certainly appreciate that. And let's see if there was any other questions. It doesn't look like. Let's see here. Yes, Frank, I can provide you a list of all the single premium carriers that we have. Absolutely. Okay. Well, hey, have a great weekend. Hopefully, some of you have little trick-or-treaters. Have a great time. Be careful driving out there, and have yourself a great weekend. We look forward to talking to you soon. Thanks.